Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro dollar. A very long bearish black crow yesterday, punching down through some significant supports. I also call it a bearish black Mariposa as well, but anyway, punching down through some significant supports that are now resistances and bringing us back within an overall bearish pattern again. The market was capped, once again unsurprisingly, by the combination of the important 50% Fibonacci line for the whole of 2023 at 108.64, with a recently capping medium moving average nearby acting as a reinforcement, currently 108.68. However, the move lower punched through and closed below the following: the previous combined resistance, then support, and now resistance of the short medium moving average, currently at 108.25, the long moving average, currently 108.28, and the short moving average, currently 108.18. Now, all together, they made what looks like a bearish bow tie formation crossing this past Tuesday. The theory behind this suggests two things. Firstly, look to which way the moving averages move after the crossover to indicate the next direction. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it would be between the 20th of April to the 30th of April, not the 20th, 30th of April, and the 6th of May. So watch out there. Looking back at yesterday's action, prices also punched down through the top of the dark blue highlighted upper time, currently 108.09, and that's of the late December 2023 to early March 2024 bearish Andrews pitchfork, as well as the potentially important May 2020 low at 107.66, and down through the bright red highlighted middle time, currently 107.31, of the bearish shift pitchfork for the same action as the bearish Andrews pitchfork, finally stopping at the April 2020 low as it did last week at 107.25. The market finally closed just above the bright red middle time. This drop almost, but as yet not quite, almost made this week a contender for an immediate weekly key reversal down. Prices need to dip below 107.23 and then close below 107.93 on this Friday to make it so. Looking below, well, there isn't that much support until the 2020 low at 106.36. Just the February low at 106.93 and a nondescript low in November last year at 106.54. This is the one thing to look out for, so please pay attention to the crossover of the times. Something I mentioned yesterday and I'm doing it again today. It's the one thing to look out for in the future. They're circled on about the 26th of April and the 9th of May. Now, so far today, an attempt lower, below the bright red middle time and down to the April 2020 low, but as yet not making the market a contender for a weekly key reversal. Not just yet. Cable, aka sterling against the US dollar. A bearish engulfing pattern and bearish long black Mariposa yesterday, following as it did after a shooting star pattern in the previous session that finally revealed itself as being a type 1 bearish. Apologies for that. Prices dropped down and closed below a load of resistances that had become supports and are now again resistances. They are the recent bow tie formation of three moving averages: the short moving average currently 106.32, the short medium moving average currently 126.61, and the medium moving average currently 126.69, plus the September 2020 low at 126.72, and the 50% Fibonacci line, the July to October 2023 move at 125.90, and its reinforcement, the slowly declining long moving average currently 125.81, plus Last week's low at 125.36 and the mid-February low at 125.32. There's a lot we went through down there. The market halted just a little short of the February low at 125.15. This big move lower has set up the conditions for this week to be a possible weekly key reversal. Thus, if we were to close on Friday night either over 126.36 or under 126.23, then we'd be on. Anything in between will have a lesser outside day pattern. This is all very interesting, as we might have here an immediate countering weekly key reversal down after last week's weekly key reversal up. Now, going back to the recent bow tie formation of the moving averages, these all entered in the right order and are seemingly exiting it in the right order. I asked over the last few days to be on the lookout to see if the moving averages head higher or lower. At the moment, they seem to be heading lower, indicating the immediate direction from the crossover. Additionally, 15 to 20 sessions after the crossover, we may see a further move in the direction of the exiting crossover. Thus, between the 25th of April and the 2nd of May, be prepared to possibly see the following: volatility, a change in trend, or a reinforcement of an existing trend. Finally, the market has now exited on the downside from the previously mentioned general congestion zone formed between December 2023 and January 2024, between the 126 area up to the 127 3/4 area. So far today, a reactionary move back up towards the overhead long moving average and looking like a possible immediate countering bullish army right now, if not a big one. Euro sterling. A lower indecisive spinning top yesterday. There was also a bullish thrusting pattern. The drop went down through the very slowly rising short medium moving average, currently at 85.49, but was halted by the combined lows of December 2022 at 85.45 and December 2023 at 85.47 before closing higher. Overhead, we have the dark blue highlighted upper time, currently 85.74 of the November to December 2023 bearish shift pitchfork, plus the nearby reinforcing and declining medium moving average, currently 85.77. Overall, the market is still within the breach but not broken. Purple highlighted late January to expanding wedge pattern, currently at 85.34 to 86.33. I recently had highlighted the possibility of the two pipe bottoms, the one seen in mid-February and then early March, might lead to speculation that we have a larger double bottom pattern formed within these pipe bottoms. However, this idea is rapidly disappearing due to the lack of any incentive to carry it out. Now, so far today, a slightly higher open and a move up towards the upper time, but failing to test it and rejected, and now dropping down to test the short medium moving average below. It is currently looking like a bearish engulfing pattern, might possibly mutate to a bearish dark cloud cover pattern, but at the moment, bearish engulfing pattern for today. US dollar against the Japanese yen. A really impressive bullish engulfing pattern and bullish open and close white Mariposa yesterday. The market punching up and closing clear over the combination of the October 2022 high at 151.92, November 23 high at 151.92, and the March's high at 151.97, and by some distance. I was going to say the October 22 high was actually at 94, 151.94, so it's not 92, it's only 2 ticks higher at 94. Anyway, the market is no longer trapped. That's what we can take from this. Further up, we have the middle time currently at 153.99 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. And then the June 1990 high at 155.78. Suffice it to say, we have now reached a new high and high close not seen since 1990. Overall, we are still within this bright red highlighted pitchfork with a lower time below, currently 146.71. We're also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead, currently at 159.24, and the lower time below, currently at 145.16. Now, so far today, some small attempts higher, just easing up a little bit over it. It's still getting capped by yesterday's high. This carries on, we may have a hanging man pattern and even an unusually placed dragonfly doji type pattern. US dollar against the CNH, the offshore Chinese yuan. A strong, reactionary, bullish white Mariposa yesterday after the previous 3 sessions of bearish black crows. The base of the action was the upper trend line extension, currently at 723.73, highlighted in dark blue on my daily chart, of the recent ascending triangle pattern. Prices punched up through the lower trend line extension for the same ascending triangle pattern, currently at 724.88, closing over it and peaking just short of last week's high at 726.61. We do not as yet have the conditions set for a weekly key reversal here. Just wanted to make that clear. All this is in the shadow of last month's monthly key reversal up here in spot US dollar CNH, the offshore Chinese yuan. However, that is not all. As though I did not show it on this chart, were also monthly key reversals up for March in US dollar CNY, the onshore Chinese yuan. Plus monthly key reversals up in March for the US dollar CNY 1-month NDF and 1-year NDF. All these are quite significant, especially if we have follow-ons. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary harder to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now. But for the moment, I'll keep those targets on my daily chart, as we've already had a false break lower, and more recently will look like a false break higher as well. So, as I say, I'll keep them on for now, but I'm happy to retire them in a heartbeat. Yet, I'm also mindful of the potentials topside from the move higher. So, for good order's sake, I have marked, for now, a primary target X2 topside for a continuing move higher at 730.05, and a secondary much harder to reach target X3 up at 732.80. So far today, capped overhead by last week's high, and below supported by the lower trend line extension in dark blue. US dollar against the Mexican peso. A second bullish white soldier yesterday after the previous session's reactionary bullish harami. Prices punched up through the October 2015 low, the November 2015 low at 1635.08, congestion at 1643.33, the December 2015 low at 1646.25, and the lower time currently at 1647.59, the dark blue highlighted December 23 to January 2024 mildly bearish shift pitch hook. However, prices ended up closing under the congestion of 1643.33. There's also a nascent mid-March to date downtrend currently at 1650.77, which assisted in capping the market. The move back up within the dark blue bearish shift pitch hook is significant, if not fully completed. Now, so far today, a higher open and a move up to the dark blue lower time once again, but not really getting that far at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.